back to Indianomics. We've been speaking with Jane Foley of Rabobank International, Yan Den of Ashmore Investments Group, and Jeff Chowdhry of LDM Investments about whether Britain will indeed exit the European Union, and if it does so, what may be the implications for financial markets and indeed for us in emerging markets. Well, actually, to that now, Jane Foley, what's your sense? What will be the impact if indeed Britain were to vote to leave the European Union?
I think if you listen perhaps to perhaps one or two of the members of the FOMC and again some voices which have been heard around about this G7 summit currently, then you do hear some commentators suggesting that this could be an event which could send shockwaves through the global economy. Now, if you consider a scenario perhaps whereby the UK were to vote to exit the EU, and then you consider that action were to create greater cracks in the cohesion of the EU itself, so that perhaps there could be another referendum in the next couple of years from another country within the system, well, certainly at that point you would be looking at something which could create significant shockwaves throughout world growth.
Well, let me come to you, Jeff. What's your sense in terms of an impact on financial markets? Are we going to see the European Union itself get looser if indeed the British were to vote leave?
I think the simple answer to that question is no one really knows. I mean, if you look at the arguments both for the Leave campaign and the Remain campaign, both of them are bringing forward arguments about what would happen under both scenarios. The Leave campaign is basically saying that actually UK will be fine without Europe, and we can continue to trade as normal whether we're in Europe or without Europe. The Remain campaign, on the other hand, is saying this is going to cause uncertainty, the pound would weaken, and it's likely to lead to some other problems. So that's the argument. But the very simple, and a lot of politicians and outside advisors have been brought in to kind of support each other's case. But the simple answer is nobody really knows what the effect is going to be of Brexit, and that's why it makes it quite tricky at this point in time for voters in the UK.
Okay, well, suppose you were a trader, Yan. What will you do? I mean, would you prepare for an eventual tumbling of the euro itself? Because we all know that in confederations, if one member exits, there is always a fear that more will exit. The way has been shown, so to speak. So will the euro take a hard knock on June 23rd if that were to happen?
It'll probably experience some volatility, but I actually don't think it's going to take that huge a knock. I think there are other factors that are going to play in. I think the pound is more vulnerable if there is a vote in favor of leaving the European Union. The European Union, after all, is the world's largest economy, and Britain has been sort of a difficult member in that relationship. I think we are likely to see a strengthening of ties between the core members of the European Union in the event of a Brexit. So I'm not too worried about the euro. I'm more worried about the pound.
Okay. Well, in that case, Jeff Chowdhry, as a longer-term investor in emerging markets like India, this is just a passing trouble for you, just a niggling worry. This is more a trader's problem, not really an investor's problem at all, especially for investing in emerging markets.
Oh, absolutely. I mean, even though the UK is an island, and we still think, some people in this country still like to think that, we're one of the big superpowers in the world. The reality is we're not. And yes, it's important for the UK, and it's obviously quite important for Europe as well. But I think longer term, the investment story is still very much emerging markets. It's still about India and China, and it's still about the big markets like the US and Japan. So yes, it's causing a lot of headlines and news here, but I think in terms of a long-term investment lesson story, it's not really that relevant, to be honest.
Okay, well, that's a bit of a relief as well for us out here in emerging markets. But Yan Den, what's the sense you're getting of the European Union itself? is it looking like lately it's as a whole slowing, it's got more problems of immigration and a constant threat of default by one member or the other? Is the European Union something that you can't swallow and you can't spit out and you're just stuck with it?
I mean, Europe has got a lot of problems, but I think sometimes the problems are a little bit exaggerated. Europe has actually benefited quite a lot from the whole era of quantitative easing, because the consensus ways to express the trades in Europe have been to weaken the euro and buy government bonds. And that has actually made European exports more competitive, resulting in very large current account surpluses. And of course, it has reduced the refinancing costs for the private sector, so that default rates, for example, for European corporates are dramatically lower than those in the United States. So actually the underlying economic fundamentals in Europe are not quite as bad as consensus would seem to imply. Remember that Europe has had weaker growth rates than the United States, but if you control for population growth differences, actually Europe and the United States have not really done that differently from one another. So there's a lot of bad sentiment about Europe, but in reality the European economy has done okay. The real vulnerability in Europe is, of course, that the member states have not surrendered sufficient power to the European Union's institutions. So you have an economic, political entity that has all the trappings of government but has none of its power, and that gives rise to a lot of frustration. Essentially, the European Union can determine the curvature and color of a banana, but pretty much everything else is determined by nation states.
Okay, that's well put. Well, Jeff, the idea I'm getting is that this whole issue is just a small political problem, a problem more with Britain and not really a problem that the European Union has created. This is just Britain's tantrums, you would think?
Well, I think that's part of that. I mean, I think if Brexit does happen, I think there's going to have to be a lot of negotiation between Europe and the UK. And I think that's a given. I think if the Remain campaign wins it, I think there's going to be less negotiation and probably less volatility. But I think the other thing which is very unusual about this is completely cut along party lines. So you've got a really unusual situation where the leader of the Conservative Party wants to stay, and they've got the ex-mayor of London, Boris Johnson, who wants to leave. So it's a bit like sort of the BJP and Congress, politicians next to each other disagreeing over a completely fundamental issue.
Okay. Well, in a way that also makes it perhaps less likely to happen, but that's really my last question to all of you. Jane Foley, you go first. Will it be a leave vote or a remain vote?
I think if we look at the opinion polls that have been coming out, particularly over the last couple of weeks, well, generally they are leaning towards giving the Remain vote a wider margin. And in fact, we've seen this perception that there couldn't be less political uncertainty on the vote reflected in financial assets, particularly sterling. We've seen sterling perhaps already exhibit some of that relief rally over the last couple of weeks on this perception that the UK, after all, will vote Remain. Now, of course, in the general election in the UK, and in fact in the Scottish referendum, the opinion polls got the results wrong. So I think it's important to be a little bit sceptical about these results. But as long as the opinion polls are showing a widening majority in favour of the Remain vote, I suppose the implication is that it is more likely that the UK will keep within the system, and I think that's partly because many people are frightened of what a Brexit could unleash.
Jeff, will it be leave or will it be Remain?
Well, the opinion polls suggest it'll be Remain, and I think ultimately the British public is probably a bit too scared to exit. So I think on balance the likelihood is it'll be a Remain.
Jan, what's your guess?
Yes, I think so too. I think Brits will ultimately vote to stay in the European Union, because I think they'll vote with their pocket. And I think they're getting scared of the potential negative economic consequences of leaving. But I think the vote will be closer than what the opinion polls suggest.
Well, actually, Jane, what happens on June 23rd itself if indeed there is this upset vote and Britain leaves?
I certainly think that they will. I mean, as I say, more recently we've seen a bit of a relief rally come early on the anticipation that this will be a Remain vote, and that would mean that if it is a leave, it would be even a bigger shock. So from that point of view, I think we would be looking for maybe a 15% fall in the outlook for sterling against the dollar. We'd also see, I think, the euro fall against the dollar, but by perhaps a smaller margin. And because of the huge amount of uncertainty that it would unleash in terms of how the UK then starts to renegotiate its trading position with the rest of the world, and these uncertainties really could prolong for a number of years, I think we would see a continual level of heightened volatility in UK asset markets for some time.
All right, we'll leave it there. Jane Foley, Yandin and Jeff Chowdhry, thank you very much for joining me. Well, then those are the key takeaways. One, that probably the vote is going to be remain and it will not be an exit, in which case we really don't have to bother. But if indeed there is that small minor chance that Britain does exit from the European Union, you should immediately expect the pound to take a bigger beating than the euro itself. But the euro definitely will go through a shudder, according to our experts. And finally, for you and me in emerging markets, perhaps it's only a trader's volatility, and such volatilities are probably times to buy. Otherwise, it doesn't really change the equation for us far away in emerging markets. That's it on this edition of Indianomics. Thanks for watching.